This is about a larger systemic change about the kind of system we operate in.
I believe that this is the moment that we need democracy more than ever.
We need more people of all types of backgrounds to step up and offer their expertise to solve the challenges in each of our communities.
Let's do what we know to be the right thing and be true to that inner voice. I didn't ask to be treated differently, but I'm going to take it on because I have a job to do and nothing's going to get in my way of doing that.
Go get yourself a political home. Vote or Lead would love to be that home. Black Voters Matter would love to be that home for you.
Thank you for your support. Thank you for leading and running as you are. And I have your back.
We are psyched for season 2, episode 4. You have been joining this. We've been calling this Radical Leaders Uncovering Our Past to Build the Democracy We All Deserve. And this 6-part series began 4 weeks ago, starting with where did we come from? We've been doing a lot of history. Last week we did a living history. And this week we're going to be examining our American values, specifically around capitalism and commerce. So to help us answer the questions about the intersections of our democracy and commerce, we have 4 really fantastic speakers who will be joining us today. Dr. Carlos Hill, he's going to be talking to us about Black Wall Street. Nkululeko Shongwe is going to be speaking to us about community wealth building. Urvashi Banerjee is going to talk to us about microfinance. And then Brianna Sidney is going to speak about cooperatives. She's a worker owner at Mandela Grocery, and I'm excited for her talk. So really amazing speakers who are doing the work right now. You'll get a little bit of history and background, and you'll get how it is living and operating these new models right now in 2020. So we know this week's topic is really critically important, but like every week, for some of us, it may be perceived as harmful. There may be some things specifically as we're some facts I think that I've learned in just the past, prep of this that, feels offensive, it feels traumatizing, it feels hurtful. And so we recognize that, and we want you to prioritize your self-care, go off camera, hop offline, come back on. And many of you have been sharing in the chat your feelings. We're grateful for that and for your vulnerability with our community. And hopefully you get that love back from our other community members. And of course, in trying to create that respectful culture during this call, you know how we roll. If you have been on with us before, stay muted when you can, but be active in the chat box. Lots of question and answer. I will be the co-host with my main woman, Paku Hang. Be respectful of other people's opinions, and we're going to try our best to keep flow and time going. This will be 1 hour today. And great, we have the learning documents. So many of you have been emailing us afterwards. This is a living document. And we, with that in mind, any learning documents we want to share, podcasts we have on there, documentaries we have on there, long form novels, research and history books, short stories, all of it, send us our way. It's been growing, and we're really grateful for that. And that document, if you want to access it, is in the chat box. So without further ado, I want to introduce Paku Hang. As many of you know, she lives in Minnesota. There was a primary yesterday. And I know she also woke up pretty hopeful this morning looking at some of our alumni, including Congresswoman Ilhan Omar winning her primary, but tons of women on the local level tons of women of color on the local level that won primaries yesterday. So really exciting times, and I'll turn it over to you, Paku.
Thanks so much, Erin. Hi, everybody. Like Erin said, my name is Paku Hang. I'm the Chief Program Officer for Vote, Run, Lead. And last night, after the nomination of Kamala Harris, I called my niece, who's 9 years old. 9 years old. And I said, Asha, my girl, Kamala Harris is just nominated. And my little niece was like, gosh, we're so close, Auntie, we're so close. And I'm reminded that history, while it's very long, we are headed towards the right direction. So I want to, like Erin, I want to thank you all for joining us today. And I want to contextualize this conversation a little bit. I think a lot of times people might be thinking like, why are you guys talking about capitalism? What does it have to do with running for public office? And I'm reminded that I have a cousin who ran and won. And when she was in the state legislature, she was getting assigned committees. And she called my uncle. She said, Uncle, which committee should I vie for? Should I put my name in? And he said, put your name in the committee that has to do with money, because it's all about money. right? And so I would argue that this is an important conversation to talk about, and it's an important topic to talk about, because when you get into elected office, oftentimes you're going to be debating about policies that have to deal with money, or going to be putting together some type of budget that is going to reflect your values, and it's all going to be about money. And all of that is can be really important, because I would argue that right now, and you see in the slide right now, we see that in the Black community, $1 circulates only 6 hours, or compared to, let's say, in the Asian American community, where $1 circulates for 30 days. And that is the culmination, actually, of many, many years and generations of both policies and budgets that don't necessarily reflect an equitable view. And that's why we have something called the community wealth gap. Can you go to the next slide? There was actually a study that just came out a couple months ago from Northwestern University, and it actually looked at income and wealth of Black and Hispanic community families versus white families. And just on the community, on the income side, it looked at how Black families only have 47 cents for every dollar of income the white families have, and for Hispanic families, it's only 48 cents. And while income is awesome, but income only feeds my stomach, right? What I'm really interested in, what we all should be really interested in, is wealth, because wealth is what feeds our minds. When you look at wealth, the disparity is even more disgusting. Black families only have 1 cent of the wealth that white families have for every of their $1. Hispanic families only have 8 cents compared to, or relative to $1 of wealth the white families have. Can we go to the next slide? And we know that this persistent community wealth gap is perpetuated because we continually put the blame on poverty and the persistence of poverty on the individual, right? And we have this myth of the poor, that it's the poor's kind of frivolous spending habits. It's the poor person who is lazy. It's the poor person who is like, does not understand finances. And that's why that person is poor, as opposed to really focusing on the systems that create poverty and the systems that perpetuate poverty. Because we know that throughout history, Black and brown people have actually had moments where they have been in communities where they flourish and they've had economic independence. But oftentimes those communities are squashed because of some type of fear of prosperity in Black and brown communities. And so that's really the conversation we want to investigate today. And
we actually have a question that I think probably is on other folks' minds. Like, what does that mean? Hours spent in the community, days spent in the community? Can you give a quick example?
Oh, sorry, can you say that again, Erin? Sorry, I didn't hear you.
Can you contextualize the like hours spent in the community, days spent in the community? What does that actually look like? Yep.
Absolutely. Yep. So that was a study that was done back actually in 2015. And it was this idea that once you get your paycheck, right? Once you get your money, how you spend it, right? If you spend it at a grocery store, and if it's a local mom and pop store, it's going to stay in that community. So the local owner is going to have it. They might actually use that same money then to pay for an employee who lives down the block. So that money stays in the neighborhood. That employee who lives down the block, they might be actually using that money to maybe pay a babysitter. So that babysitter lives down another block. So that money stays in that physical local community. But if you go back and you say, okay, I get my money now and I'm going to use it, maybe I'm going to go to Walmart and use it at Walmart. Well, Walmart is actually, if I'm in Minneapolis, Walmart is headquartered in Arkansas. That money immediately goes to Arkansas, and right away that whatever that amount I spend, it's outside my community already, right? Or let's say, for example, if I live in the community and I own a house in the community, but the bank that I bank at actually has sold my mortgage to another company that's in Indiana. When I pay my mortgage, right away that money goes to Indiana, doesn't actually stay in my community. And what's important is that when it stays in the community, it means that there's a bigger pool of capital that other people can tap into to build on capital, and that cumulative building, that is the acquisition of wealth. Awesome. So we know that the myth of poor people is false, and we know that the myth specifically of like Black and brown people and marginalized and disenfranchised people being, that's the reason why they are, it's just because that's how they are. We know that's false because we have had historical moments and examples where communities of colors have flourished. And so I wanted to actually introduce, or Erin, I know you're going to introduce our first speaker who's going to talk about those instances.
So with us today to talk about Black Wall Street and why Black prosperity was such a threat to the status quo, as Paku mentioned, is our first speaker, Professor Carlos Hill. Professor Hill is an tongue-tied today. Associate professor and chair of the Clara Luper Department of African and African American Studies at the University of Oklahoma. He's the author of Beyond the Rope, The Impact of Lynching on Black Culture and Memory, The Murder of Emmett Till, Graphic History, and his forthcoming book, The 1921 Tulsa Race Massacre, a photographic history that will be published in April of 2021 with the University of Oklahoma Press. If you have any questions for Professor Hill, please type them in the chat box. Welcome, Dr. Hill.
Welcome. Thank you for having me here today. I really appreciate it.
So Dr. Hill, can you start off by telling us what is Black Wall Street? You know, what is it? What happened there?
Mm-hmm. For sure. Black Wall Street is the name given to the Greenwood District by Booker T. Washington in the early 19-teens. And Booker T. Washington, when he actually didn't visit the Greenwood, he came to Oklahoma and visited several all-Black towns in Oklahoma. But nonetheless, he learned about the businesses and the prosperity of the Greenwood District upon his visit. And, you know, by 1921, the Greenwood District, there were about 10,000 or roughly about 11,000 African Americans living in the area. And the area was about a 35-block area. And there were nearly 200 Black-owned businesses in the Greenwood District in 1921. And so, you know, not only were there 200 Black-owned businesses, most of the property in that community, this 35-block area, were owned by African Americans. And so Black people in Oklahoma, and specifically in Tulsa, were able to build wealth. And the wealth building that occurred in Greenwood led Booker T. Washington to refer to it at that time as the Negro Wall Street of America because it was a symbol of what was possible in a segregated society, that was deeply hostile to any form of Black advancement. And so Booker T. Washington wanted the world to understand that this was possible. He wanted the world to understand that economic independence in a segregated society could happen, and it could happen on an awesome level. And so that's why we have come to talk about Greenwood as Black Wall Street.
So I know that Greenwood really kind of trended in the lexicon because a couple of weeks ago, Trump was going to come to Tulsa for a rally. And what also came up was that while Greenwood was amazing, there was a horrible race riot that happened. Can you tell us about that?
For sure. So on June 1st, 1921, a white mob that numbered in the thousands. And this mob included police and the local unit of the National Guard. This white mob invaded Greenwood. And within less than 12 hours, burned the entire community, this 35-block area, to the ground. And so every significant structure, whether it was a home or a business, was destroyed. And in less than 12 hours, this community that had become the Negro Wall Street of America was destroyed, and $26 million in Black wealth was liquidated in that, in a span, again, of less than 12 hours. And so, the 100th anniversary of the race massacre is upon us. And part of what the commission is trying to do is to help the Tulsa Race Massacre Commission is trying to do is to help people to understand that the community did not simply fade away after the massacre, but that it rebuilt itself and that it was bigger and more prosperous in the decades following the race massacre than it had ever been in 1921 or before. And so the story that the commission would like people to understand is the ways in which the community triumphed over the tragedy that occurred to them. And so the same, 200 Black businesses that were destroyed in 1921 rebuilt. And by 1942, there were nearly 250 Black-owned businesses, and the community had doubled in size just 20 years later. And so the Black Wall Street could have easily went by the wayside as other Black communities that had similar kinds of violence, that experienced similar kinds of violence, were destroyed and never rebuilt, but Greenwood rebuilt. And that's the story that the commission that I'm a part of really wants the world to understand.
I love that because it is a story, like you said, of triumph and resilience. But Dr. Hill, I'm also wondering why was Greenwood such a threat to the larger Tulsa community? I mean, don't you want a neighborhood that's thriving in your city?
Yeah, I mean, if racism was rational, we might not be having this conversation, but we have to understand that these were, different times. And, the guiding idea of the Jim Crow era was that Black people were inferior and that Black people were not capable of self-government. They were not capable of building businesses. But you had Greenwood, you had Black Wall Street that made that idea a lie. But even on a deeper level, you had whites in Tulsa who believed that Black wealth and Black prosperity would ultimately lead to a desire for social equality with whites. And the ways in which whites interpret social equality was that it meant racial intermarriage. And if there was racial intermarriage, then that would mean the end of racial segregation writ large. And so in many ways, Black wealth and Black prosperity was seen as a kind of existential threat, right, to the system of segregation. And in fact, city leaders actually blamed the massacre, or at that time they referred to as a riot. They blamed the riot on the NAACP and other quote unquote race agitators who promoted social equality with whites. And so there was this deep fear that economic independence, economic autonomy would lead to an increased desire for social equality. And that would, in fact, in their minds, threaten the system of segregation. And so that's why, Black Wall Street was not just it was a symbol. For Black people, it was a symbol of excellence and great pride, but for whites, it was sort of this symbol of an existential threat to the system. And so that's why Greenwood, in my mind, was a target for destruction.
Thank you, Dr. Hill, because what you're saying, I'm also hearing that we have to be critical thinkers and pay attention to what's really going on, right? That you can use that on the one hand, you can use an excuse, but it actually is cloaking this larger target. And as you're talking about Greenwood, I'm also thinking about Rosewood. I'm thinking about in my hometown of St. Paul, Minnesota, there was Frogtown. There were across the country, I bet among the women in this, our supporters in this Zoom call, if you just investigate in your own city, there is probably one neighborhood that is like Greenwood that was prosperous, but for some reason, in my case in Frogtown, it was Highway 94 came in to decimate, to destroy that wealth and displace the people. But that was a distraction, right? Because the real target was that fear of social equality. Mm-hmm. I'm wondering if Aaron, if we have questions in the chat room, in the chat box for Dr. Hill?
do. There's some questions about just the lives that were lost and sort of the human toll of Greenwood.
Yes. So, imagine 1,200 residences / businesses destroyed, as well as we believe, and when I say we believe, those who have studied the race massacre very carefully, as many as 300 people died as a result of the massacre. Of course, we don't know for sure, but this is based, the number 300 is based on the American Red Cross estimate of how many people actually died. But even in 1921, because of the conspiracy of silence as well as the cover up of what actually happened, we don't know. But this estimate of 300 is based on the American Red Cross, in the research and reporting that they did in the days following the massacre.
Thank you. We have another question about the Black farmer experience. If you could speak to that, in the sort of the systems that may be similar around white supremacy and anti-Black racism and destroying the wealth of Black farmers.
I don't know if I can speak to that intelligently, but I would say just in the context of Oklahoma, you have a Black farming tradition that was maybe, unseen in other parts of the country, because there were 50 all Black, more than 50 all Black towns in Oklahoma, more than any other state in the country. And so part of what made those towns really important is the farming tradition, but as well as just the history of Black land ownership. And even though the majority of those Black towns are no longer in existence, about 10 of them are. And so that's something that, many of those communities are kind of on their last leg, because people are moving away, and there are no jobs, or not in the way that they were before. But in the context of the larger sort of story of Black farming, I'm not sure if I'm the best person to answer.
Maybe you can, there's a comment, but I'm actually going to turn it into a question as someone who graduated from Norman Public Schools in Oklahoma, and that she was taught that Greenwood was a race riot, and it started the chain that more recently resulted in the Watts riots. And the History Museum also has a pretty shameful display. What is the good work that's happening? I'm going to kind of, that you're seeing to get some of the historical inaccuracies changed in Oklahoma?
Well, the first thing is just the Centennial Commission has made a concerted effort to talk about what occurred as a massacre versus a race riot. And the reason for the emphasis on massacre versus race riot is there's an attempt to really lift up the voices, the perspectives of victims and survivors. Victims and survivors of the massacre in 1921 talked about it as a massacre. They talked about it as a disaster. They talked about it in ways that have nothing to do with it being a riot. And so I think a big emphasis for the 100th anniversary is to make sure we center the experiences of victims and survivors, but also emphasizing it as a massacre is about making it clear that this was an intentional military-style assault on a community that included airplanes and bombardment from the sky. Maybe the first, if community in American history to be bombed, right? And so telling those hard truths about what actually happened is something that, because of the commission, is happening now. I've certainly tried to be a part of that by organizing the first ever Tulsa Race Massacre Summer Institute for Teachers. And so for the first time in history, teachers in Oklahoma will have to teach the race massacre, but how will they do it? And so the Summer Institute is a place where they can learn how to do it and not be afraid to have, really, to really do hard history and talk about hard history. And so I've been inspired by the courageousness of some of the leadership in Oklahoma around moving forward and telling the truth about this history. But there's so many things that we're going to have to face. Namely, right now, what's really urgent is the search for mass graves, and the city grappling with what that really means, and will the city really confront that? So there's a lot of stuff on the table, but I've been really I'm more hopeful than I have been in the past about us really confronting this history.
Thank you so much, Dr. Hill. I mean, I'm really hearing you say about how this is a moment of truth telling, right? And whether we have the courage to face the truth as a beginning. And I'm also hearing that your talk is really reminding me that these assaults are not historical, that they're happening right now. And Gay Trust just commented in the chat box that right now a lot of Black-owned businesses, and I'm thinking about this not just in Black communities, right, but in Hispanic communities. I'm thinking Southeast Asian communities where the businesses are being gentrified, or they're trying to flourish in neighborhoods that are gentrifying, and that in itself is a different type of assault. And that brings me to kind of our next speaker, who's going to talk about, how do we build our wealth, right? And Dr. Till, you were saying, how do we reclaim it? But how do we sustain it? And also, what are different models that we can look at to measure wealth, to measure the health of the community? And so, Erin, would you mind as our second speaker?
Yep, absolutely. And Kulilego Shangwei is an organizer, a facilitator, a cooperative enthusiast. I love that. As she works at Nexus Community Partners as the Community Wealth Building Coordinator, where her work focuses on building just and equitable communities by promoting local and broad-based ownership, lifting up cooperative and culturally based economic practices, and developing the next generation of leaders. Welcome.
Thank you. Hi, thank you for having me. So I'll be talking about community wealth building. This is a strategy that we've used at Nexus now for the past 5 years. And just a quick bit about Nexus. We're an organization in St. Paul, an intermediary, and our work really focuses on 3 ships: authorship, which is like community engagement; leadership, in the word leadership; and ownership, which is really about community wealth building and owning your own wealth. And so what is community wealth building, right? So community wealth building, it is an economic framework and a system changing approach that promotes local and broad-based ownership. Next slide. This framework, it really helps to lift cooperative and culturally based economic practices. It helps us to build intentional relationships among community members in a local ecosystem. And it helps us to invest in strategies that are really grounded in equity, stewardship, and mutuality. Next slide. Community wealth building as a whole, it helps us to redesign markets to move away from extractive policies and investments and really focus on building regenerative local economies. So I'm going to talk more about what is really in community wealth building and what it entails. But before I go that, I want to really compare and contrast community wealth building with our traditional economic approaches. So these are the 2 approaches of community wealth building. And I will also, I will define extractive policies as well as we continue in the next slide. So these are the 2 approaches of economic development. On the left, we have the little picture. So those are the drivers. The first column, that is community wealth building. And then the second column is the traditional approaches. So I'm going to start with the traditional approach. The first one is place-based, and it aims to attract firms using incentives which increase the burden on local residents, will increase the tax burden. And an example of this would be Amazon. In Minnesota in particular, Amazon was looking to build its 2nd campus here. And Minnesota offered $3 million to $5 million in subsidies. Fortunately, the deal fell through and it's not here. But it did move to Virginia and Nashville, where the campuses, basically they have over $100 million in performance-based incentives. And that really puts a lot of burden on the local residents and the local economy. Comparison to that is the community wealth building, which it helps to develop underutilized local assets, of many kinds that benefit local residents. So in terms of ownership, starting with the traditional approach, ownership supports absentee and elite ownership, often harming local and family-owned firms. And opposite to that, we have the community wealth building approach, which is helps promote local and broad-based ownership at its foundation of a thriving local economy. So a lot of the work that we do around that, around ownership, is around cooperatives. And I know there's someone is speaking about cooperatives later, but we really took this thought from Dr. Jessica Gordon-Nemhart from a book called Collective Courage, A History of African-American Cooperative Thought and Practice, where she talks about the history of Black cooperation in the United States from the time the enslaved peoples were brought here and had to build a life for themselves in a market that was not for them. And so how do we build things that are for us, by us, that continue to sustain us, especially when we're not involved in mainstream markets? So the third one is multipliers. So that pays less attention to whether money is leaking out of community. So like economic leakage, that's a huge issue, right? And so when we talk about community wealth building, multipliers encourages institutional buy local strategies to keep the money circulating locally. There's a lot of power in having the local dollars like in the community. So yeah, okay, so the next part is the collaboration. And the traditional economic framework says decision-making is led primarily by government and private sector that includes local residents. That is incredibly problematic. The people that are represented, the people that are part of the community have to be represented at the table. They have to be the decision makers. Yeah, they have to have a seat at the table in order to do this work well. So in a collaborative method that includes community wealth building, this brings many players to the table, including community, including nonprofits, including philanthropy, anchors, and cities. It's an ecosystem-based approach that looks at all of the sectors and all of the entities and how they can come together to strengthen communities. And then on the other side, so inclusion, right? Key metric is the number of jobs created with little regard to wages or who is hired. That really dehumanizes that whole process. And community wealth building, it aims to create inclusive living wage and jobs that help all families enjoy economic security. Workforce is a huge one. So in the traditional approach, it relies on generalizing training programs without focus on linkages to actual jobs. Like we can't have programs and not know what happens after that. We need to know if a person goes through a program, will they be able to get a job? What are the barriers? What barriers will they face, etc. So the community wealth building approach, it helps to link training, employment, and focuses on jobs for those with barriers to employment. And then last but not least is a huge one, system. So traditionally, it accepts the status quo of wealth inequality, hoping benefits trickle down. And on the other end, community wealth building helps develop institutions and supportive ecosystems to create a new normal of economic activity. So the traditional approach we've been using for a very long time, but it is not working. It has not worked. It will not work. And so we can't keep doing something and expect different results. And that's why we talk about community wealth building as a new way to really center community, to sustain ourselves for like generations to come, because that is important. Also, community wealth building, it's not an overnight strategy. This is the long game. This is an investment in our future. It is investment for, like I said, generations to come. Traditional economic models, they really waste billions of dollars of taxpayer money to subsidize this economic development, this blackmail threat of moving job loss that is driven by the need to increase profit margins and the profit of corporations that have no loyalty to communities, and the communities end up footing the bill. And that can't keep happening, because that is extractive, and it's traumatizing, and it just provides a lot of issues in community that we do not need. So I'm going to talk about our community wealth building values and principles. So these are the principles that we use at Nexus to help us think about the work, and also they'll help us look at the definition that I gave earlier. So The first one being equity, right? So equity has to be central for the work to take full advantage of the opportunity structures and truly eliminate racial and economic disparities. Essentially, we all do better when we all do better, right? Local ownership. Local ownership helps to increase the circulation of resources within community, and it builds more resilient economies. This fosters individual and family wealth. It helps to stabilize economies, and it strengthens ties between people and place. The next one being anchor institutions such as hospitals, schools, etc. And those are key partners to community creation because they have a sense of mutual exchange and interdependence with community that can be instrumental in shaping the neighborhood's long-term economic viability. The next one is mutuality. So mutuality has to be at the center of all partnerships and shared efforts. Understand that mutual care and responsibility are the core ingredients to a civil and communal work-life balance. The next is cultural practices, and I really enjoyed talking about cultural practices because I think we're beginning to see these as assets to our communities and not measuring ourselves against like whiteness or white standards, essentially saying that our cultural communities bring a lot to the table. So how can we use that to gain additional resources? So cultural practices, they hold solutions. For economic strategies have to be tailored for specific communities in order to benefit them. Culture is a resource for creating and expanding wealth building options. And that goes back to like the talk that was just given with like Black Wall Street, right? Creating specifically culturally appropriate strategies in order to elevate the cultural wealth in communities and community wealth. The next is develop community assets. So develop productive assets that support multiple wealth building strategies and systems. We have to create multi-lane strategies that reinforce one another and contribute to the economic fabric of our communities. The next is policy, systems, and leadership. Okay, thank you. So policy and leadership must shift to realize sustainable change. Policy-making tables should reflect the communities that are designed to impact, and formal leadership development pipelines are fundamental to achieving sustainable change. And last but not least is stewardship. So stewardship moves residents to a place of being both consumers and producers in the economy. As stewards of local wealth, residents exercise roles of economic governance and responsibilities. So we use all of these principles together to really think about what community wealth building looks like for our communities, for our policies, for our systems, and try to move away from extractive policies that do not work for us as we continue to move on this journey. So that's all I have for my presentation, and I'll take questions now.
Nukuli, I love what you just presented because I think on the one hand, like the first slide you talked about, you showed us, it really gave us tactics for how we can do economic development in a much more holistic and equitable way. And then the second slide you shared with us was really like the metrics, right? The framework that we should have at the forefront when we begin looking at economic development projects. And I'm wondering, I know there's a bunch of questions in the chat box, but I'm wondering, what do you think this says about the ecosystem? You had said that, you know, community wealth development and community wealth building, it's not like a 6-month deal, it's a generational deal. How does that intersect with like the ecosystem of education, housing, you know, healthcare, transportation?
Yeah, I mean, I think we have to really think about like what we have in community and what we can use to our advantage. So when we couple those things together, when we couple the community wealth building strategies with what we have in our local economies, that like helps us to bring a stronger foundation for what we're trying to do for the future. Like I can't do this myself as a nonprofit. Like I need like people in government, I need people in hospitals, I need people in schools, and it really helps us to like redirect or rechange the way we think, and helps us to like be like more community like centered in a way. And it's not about, I think it's all like back to cooperatives, it's all about this like collective it's about being collective and not being individualistic in this thought.
Yeah. Erin, do we have a question from the chat box?
We have such good questions. I'm trying to think how to get them all in. But I'm going to go with Lisa Sun's because you were just talking about that. So how, how can community wealth building work in tandem with local, state, and national economic development agencies and financial institutions to sort of reorient them? And I want to just add Elizabeth's comment that, sometimes she feels like only women and Black, Indigenous, and people of color are the only ones sort of talking about this thoughtfulness. And so are we sort of like ceding ground and having like the white male capitalist model, like get faster and scale bigger and, at the same time? So I'm going to combine both of those questions for you. They're pretty intense, but I think you can handle it.
Yeah, so I think for the second question, yes, yes, based on our country, the history, it centers a lot of whiteness, unfortunately. So a lot of the times, a lot of the BIPOC communities or women or other people with marginalized identities end up doing the work, which is why I was saying this needs to be like a multi-sector approach, because we need buy-in from our white allies, because we can't do this work if you're not doing this work either, because we're not going to get anywhere, right? And so that's why when we talk about community wealth building, it not only exists in the nonprofit sector, we're also looking at different financial sectors. Cooperatives like credit unions, those are institutions that are for community, that are built for community. And so how can we move away from like extractive policies like US Bank, et cetera, to include more community-based structures like credit unions or like mutual aid funds or like lending circles, all these things that we practice to the forefront of like what we talk about in conversation. And the first question, can you repeat that one?
Working with the state agencies, working with like a statewide economic development agency. Have you had success? Have you seen that happen?
Yeah, we've worked with a few, mostly my peers or my colleagues have worked with that. Rapaz sits at many tables where he really tries, Rapaz the boss, he really tries to get people to change their language and change their way they think so that we can buy into more community wealth building related practices. And
there's actually an example when St. Paul Mayor Melvin Carter came
yeah.
into right? Yeah. When St. Paul Mayor Melvin Carter came into office, he wanted to change the name of the department from like economic development to community wealth building. And then as part of that change, he wanted to start investing in like trainings for cooperatives, how to start, and even having like seed funds to fund the beginning of cooperatives. And so I feel like this conversation and this learning is really appropriate for this audience, you all, those of you who are running for, city council or state legislature, or even on the federal level, because you as the decision makers can create those parameters, right? You can say, yeah, the traditional model is to scale up, but we are going to demand that at that, council, 50% of those, right, or 65% are from people who live in the community. Or we're going to say, yes, we're going to give money for that, for those small firms. We're also going to give equal 50% of that funding for the beginning of cooperatives. So we can create the infrastructure that hopefully gets us to the outcome we want, which is a more equitable, robust ecosystem, I think.
Yes. Yeah.
Cooley,
yes, thank you so much. There's so much here. And Cooley and Dr. Hill, there are quite a few questions in the chat. So I'm going to encourage both of you to go back in there, and you can message folks privately or publicly. They're asking for more resources, and anything you put in there, we'll share community-wide. So please drop some resources in, both Dr. Hill and Cooley, for the more detailed questions from our community. Thank you.
All right, thank you.
So we heard from Dr. Hill and we heard from Cooley. Both of them are giving us an example of when Black and Brown, people of color, Indigenous communities have flourished, have been economically independent, and a different way of thinking about those examples and a way of thinking about our present. And what we wanted to do now is go from the theoretical and philosophical to the ground and share with you all real life examples of how some of these alternative economic models are being played out. And so our next two guests, we're going to actually we're going to do it more like a panel discussion. And so Erin's going to introduce them, and then I'm going to jump in and ask them some questions. Okay.
Great. First is First up, we have Urvashi Banerjee, who's the co-chair of Women Advancing Microfinance New York. She's a product management professional with a passion for international development and social impact, graduating with a double major in political science and international studies from the College of New Jersey, has worked for major financial corporations, Bloomberg, Intercontinental Exchange, and Brianna Sidney, who's a worker owner at the Mandela Grocery, an Oakland native who started working at the cooperative in 2017 at 19 years old. with no previous grocery store experience or cooperative experience, but really intrigued by the idea of cooperative economics and of the co-op's mission to be an active community member. And I'm really excited for this conversation.
Yay. So I'll start off with you, Brianna, and then I'll go into you, Irashi. But Brianna, what are cooperatives, and specifically, what is an owner or worker owner cooperative?
So cooperative, for the most part, is really just speaking to the way it's governed. So instead of a top-down sort of government, it's more horizontal. Everyone's equal, everyone makes the same decisions, everyone has like the equal amount of shares. And most grocery, or I don't even say most, but some grocery cooperatives are, I think they're called member cooperatives. So only folks who pay into that cooperative can shop there. And the difference between ours and that kind is that we're a worker-owned cooperative means all of the workers there are part owners, but it is open to the public.
Got it. So you are a worker owner of Mandela Grocery Co-op in Oakland, California, right?
Yeah.
And in total, how many worker owners are there?
So currently we have 9 worker owners and we have 2 candidates.
Got it. And you said that you didn't have any experience with cooperatives. How did you jump in and be a part of that cooperative?
I think I have a little bit of a different intro than most folks. I really didn't know much about Mandela before I had joined there. I actually had took a leave of absence from my university. And in that year that I was not going to school, I felt like I just needed something to do instead of sitting around. And my mentor had told me about Mandela, and so I went and I applied and I started to learn more and just really wanted to keep going.
I love that you had like a gap year and then you ended up being an owner of a business, like a thriving business in Oakland. Like that is like such an amazing story. And I want to come back to it. I want to go now to Urvashi. Urvashi, you work with, you actually not just work, you helped founded an organization called Women Advancing Microfinancing. Can you tell us a little bit about the organization? And then can you give us examples of what microfinancing is? I feel like that's a really intimidating term.
Yeah, absolutely. Well, thank you, everyone. Thank you so much for having me. As everyone said, my name is Urvashi and I'm the co-chair for Women Advancing Microfinance. But before I go into WAM, I really want to just define what is microfinance. So it's a category of financial services that targets individuals and small businesses that lack access to conventional banking and related services. So microfinance really just serves the underbanked and the underrepresented. So the idea behind microfinancing started off in a small rural village in Bangladesh with a small microcredit, which is just a provision of small loans to clients. And that simple concept has evolved into a full-blown industry. So some examples that you see today can be in a form of savings, microinsurance, payment services, fund transfers, and we see examples of microfinance in our communities today, just as Nikuli talked about community wealth building, the cooperative that Brianna's speaking about. We have certain federal credit unions that serve underprivileged neighborhoods. We have just supporting small businesses and microfinance entrepreneurs on an institutional level, and these are called MFIs, which are microfinance institutions. So where WAM comes in is that Women Advancing Microfinance New York is an organization that's focused on bringing together like-minded women and men interested in financial inclusion and social entrepreneurship. So what we do is we focus on programming that provides networking opportunities, educational series, and seminars with leaders in the industry. But all of our proceeds go to the annual scholarship fund, which we give $5,000 every year to women from economically disadvantaged communities, domestically or globally, who work in the sector.
Urvashi, I think this is so interesting because oftentimes I feel like people think about microfinancing as something that happens in developing countries, right? Or it's like a tool that like poor people in, China use. But I remember in the 70s and 80s, federal programs that actually had these things called IDAs, individual development accounts. And so they were like small savings accounts that each month or each year you would save a little bit. And then there would, the financial entity would match it. So you would save maybe $100 a month. And then maybe the federal government would match it 1-to-1. So you save 100, they save 100. And at the end, you would have like this lump sum and you could use it towards your education, right? And that there are like all these creative ways to think about both saving money, but also how to lend money back into the community. Can you share with us, like, what are some examples, some successful examples of how that's happened that people might not think is like traditional banking?
Yeah, absolutely. That's a great call out because to provide context, the United States is about 8% of Americans that are underbanked. So that roughly translates to about 9 million of men and women who are without any kind of bank account or financial service. So in the 1980s, like you said, when microfinance really started blossoming in the US, it was actually as a result of change in welfare policies, social welfare policies that put more of a focus on economic development and job creation at more of a macro level. So a really good example of that and a way to make microfinance more sustainable as we go forward is actually to move it away from a donor financed type of system into more of a sustainable system that brings together public-private partnerships, that focuses even on private capital. As daunting and instinctually scary that might be, there actually is a lot of potential to work with private capital. And a really good example of that was when a tier 1 and tier 2 bank partnered with USAID to create a consortium of microfinance institutions where the banks would actively promote flowing away private capital from your traditional equity investments into microfinance institutions. And that proved to be a really successful experiment. And USAID continues to do things like that on an annual basis.
Wow. So Urvashi and Brianna, I'm wondering, what do you guys think? You know, you're talking to an audience of future, if not current, lawmakers, right, and decision makers. What do you think folks in government could do to be supportive or allies in the creation of a more equitable economy?
I have two things that I thought of. I think one can be to implement some kind of income ratio caps for the folks that are in power, like CEOs, to help limit the income gaps. Co-op law has something similar to that. Like, we have our members and we have our candidates. Candidates are not yet members, they're not yet considered owners. So at the end of the year, when we have our surplus money, any money earned by the candidates cannot go to owners' pockets. So that's to stop us from exploiting candidates and perpetually having candidates without ever giving them member benefits. And another one that I can think of is when we apply for grants, most of the time we need to have a fiscal sponsor, and they kind of just act as a middleman. They don't really do much work for us, and it just takes away the money that we can use. And from my understanding, I think we need to have a fiscal sponsor so that they're a nonprofit that kind of helps y'all vet, or not y'all, but people who are giving who are giving the grants kind of vet that, like, we are a reputable business.
Yeah.
Yeah. But I don't know, there just needs to be a better way that doesn't mean we have to give like an eighth or some fraction of our grant to someone else just to say, yeah, they're good. Or I don't know if there's a way to like exclude co-ops, because we're kind of in the middle of like, we are doing nonprofit work, giving back to the community with no expectation of getting anything back. We just want to enrich our community, but we also have a revenue generating business that is still serving the community. So we're in a bit of a middle situation. So maybe if some different law that would apply for cooperatives. But yeah, those are my two things I have.
Thank you. What about you, Urvashi?
So I think to build off of what we mentioned before with community wealth building and the idea of an ecosystem, I think that is truly what will bring lawmakers to support more of an equitable economic development if they think about how we can create wealth as part of an ecosystem. So comparatively to traditional methods of banking, which unfortunately could lend itself to predatory lending, it's not just focusing on the financial transaction itself, which is the vehicle, which is the loan, but it's more so thinking about the investment, not in terms of financial capital, but in terms of human capital. So you're investing in humans, you're investing in societies and communities that can create social benefits that are a ripple effect from not just the money that's being lended, but to the person. And so to encourage any kind of financial player, whether that be a huge bank or a small MFI in a local community, to think about investing in people first and just going beyond the balance sheet, I think is what will really take us there.
I love it. Investing in people, like what a concept. So thank you so much, Arashi. Thank you so much, Brianna. Thank you so much, Nakuli and Dr. Hill. Like this conversation is so critical. I feel like in politics, especially when we're running for public office, we often don't think about different tactics and metrics to think about a fair economy, but it's at the heart of both government work and work for public service. So thank you so much.
Thank you for having us.
Yeah, Erin, did you have a couple of announcements?